Good day, Junior Tickies. I'm Mrs. Brimacombe, and we are going to look at Bank Reconciliation Activity 4. In this activity, we are going to look at how do we show the transactions directly in the bank account without completing the cash receipts journal or the cash payment journal. A reminder what I said earlier, we are looking at exposing you to all the different ways in which bank reconciliation can be asked in tests and in exams. Required, enter the additional entries directly in the bank account and balance the account on 28 February 2021. Prepare the bank reconciliation statement on 28 February 2021. And why is it essential to prepare a bank reconciliation statement? Provide 2 reasons. Looking at information A, extract from the bank reconciliation statement on 31 January 2021. Our current month is February, which means if they presented you with an extract from the bank recon for January, this is the previous bank recon. And what do we need to do with the previous bank recon? We need to compare it to the bank statement of this month to see, does it now reflect on our bank statement, yes or no? A reminder, if it does reflect, we just tick it off. If it does not reflect, we need to look at the additional information to see what is it that we need to do. Don't get caught out in a test or an exam if they say to you, but these transactions does not appear in the February cash journals. It should not. From the previous bank recon, in last month, in January, we would have shown it in the cash journals. We took it to the bank reconciliation because it didn't reflect on the bank statement. So we're not going to show it in our cash journals for February. Don't get caught out with that. Now looking at the outstanding deposit. The outstanding deposit of 62,420 on the bank reconciliation statement was in respect of sales. It did not appear on the bank statement for February. An investigation revealed that the bookkeeper never deposited the money. He used the money to pay for his daughter's hospital cost. The bookkeeper resigned and cannot be found. It was decided to write this off. So now, if we decide to write this off, yes, money is missing. It's a loss. But they specifically said to us, this was in respect of sales, which means that our sales will now be overstated. We need to correct that. So to do this correction, it will be shown in our CPJ because we're not going to recover the money. Our bank account must decrease with that amount. And we're going to show the contra account is sales. It's 62,420 less. We're going to look a little bit later on that when we complete the bank account. The outstanding deposit of 24,210 appeared on the bank statement, so we just tick it off. We're going to do nothing with it. EFT 121 and 142 appeared on the bank statement, so again, if it appeared on the bank statement, we do nothing. We're just going to tick it off. Now, if you go to the previous bank recon, what is left? Favorable balance as per bank account. Reminder, the balance as per bank account is used as the opening balance in the general ledger. So circle that because you're going to need it when you complete the bank account. Completing the bank account, we're going to start with the opening balance. Favorable balance as per bank account. Favorable balance means it will appear on our debit side. So balance brought down 474,188. Information B, the provisional totals from the cash journals. Remember, bank recon, we're updating our books. So we still need to include those totals in our balance in the bank account So on the debit side, we're going to have sundry accounts or total receipts, 64,811. And on the credit side, sundry accounts or total payments from the CPJ, 53,991. Our first entry, that transaction, the money that will not be recovered from the previous bank recon, the outstanding deposit, that needs to be taken to the CPJ, and from the CPJ, bank is always credited. So the contra account is going to be sales, 62,420. Looking at information C, the following information on the February 2020 bank statement from PA Bank did not appear in the February cash journals. The following information on the February 2021 bank statement for PA Bank did not appear in the February cash journals. So if I look at a deposit of 54,000 from PX Bank being a fixed deposit of 52,000 that matured together with the interest. So we've received money. When the business receives money, this is recorded in the cash receipts journal. Why did we receive money? A fixed deposit matured, 52,000, and the interest on the fixed deposit was 2,000. If I add the two together, it should equal the 54,000. Why do I need to split this up? Materiality. It's important to show the information separately. We want to know what was the return on our investment from investing money into a fixed deposit. How much did we generate from that? A deposit of 18,200 from S-Bester for a monthly rent. This means that the business received money that will go into the cash receipts journal, and if the cash receipts journal from the cash receipts journal bank is always debited, rent income 18,200. Again, always be specific. You cannot just write rent. Then we have EFT fees, cash handling fees, and service fees. This is all regarded as bank charges. It's payments that were made directly from our bank account towards the bank. So this must be shown in our CPJ, and from the CPJ, bank is always credited. So bank charges added together, 890. Interest credited to the bank account. Credited to the bank account means that on our bank statement, it will reflect on the credit side. And on the credit side, on the bank statement, it's positive for us. This means we've received interest. It will be shown in the cash receipts journal. From the cash receipts journal, bank is debited. Interest on current account, 108. Debit orders. Debit orders, remember, it's an instruction to a third party that money must be deducted from our account to pay, for example, insurance. So if I look at the debit orders, the first one, ML Insurers, 8,400. 6,200 is for the business vehicle and the balance is for the owner's vehicle. So very important. I cannot say 8,400 is the payment and I'm going to show it as insurance and that is our operating expense. Why? The business entity GAR principle says that the owner's personal finances must be kept separate from the business, which means that anything that the owner takes for personal use must be recorded as drawings. So this is why I'm going to say a payment was made, so it will be recorded in a CPJ. From the CPJ, bank is always credited. So I'm going to have insurance 6,200 and the difference 2,200 will be drawings. If I add the two together, it must equal 8,400. Our next debit order, CM Bank, 4,300 installment on loan, which means a payment was made towards the loan. From the CPJ, bank is always credited. So payment, loan, CM Bank, 4,300. Very important. You cannot just write loan. You have to write CM Bank. I can have different loans from different financial institutions, so you need to be specific. Our next debit order, City Council, 56,250 for water and electricity. Again, from the CPJ, bank is always credited. Water and electricity is the contra account, 56,230. If you look at the last transaction, EFT 211 for 2,631 in favor of Choppy Motors was recorded in our CPJ. The bank, however, debited this EFT twice on the bank statement. This will be rectified on the next statement. This means that the bank made a mistake, and if the bank made a mistake, we have to show it in the bank reconciliation. Once we've completed all the transactions directly in our bank account, we can total and balance this account to find out what is our new updated bank balance. So if I take the debit side and I minus the credit side, the new updated balance is 425,076, and this appears on the debit side, which means it's a favorable bank balance. Completing the bank reconciliation statement. Information E, the bank statement showed a credit balance of 392,650 on 28 February 2021. So balance as per bank statement will appear on the credit side, 392,650. A reminder, the bank reconciliation, everything except balance as per bank account appears as it would on the bank statement. Looking at outstanding deposits, we've got two outstanding deposits on 25th February 2021, 13,820, and then we've got another outstanding deposit on 28th February 2021, question mark. So this is asked differently than what you used to. It's always, or normally, they ask you to calculate the balance as per bank statement. That will be the balancing figure, or calculate the balance as per bank account, which will be the balancing figure if they didn't ask you to complete the new updated bank account. And now they've asked you to calculate the outstanding deposit. So this will become the balancing figure. So to start with the outstanding deposit on 25th of February, 13,820 will appear on the credit side as it would on the bank statement. The outstanding deposit on 28th February will be the balancing figure. Next, outstanding EFT 323. I don't care for what reason, it was for equipment purchased. We are going to indicate in our bank reconciliation statement outstanding EFT and the number 323, and it will appear on the debit side as it would appear on the bank statement. It must appear in the bank recon. Now, EFT 211, remember, the bank made a mistake. They debited our bank account twice, which means they've incorrectly debited it. Now they will need to credit that with 2,631. Balance as per bank account. It was calculated a favorable balance, 425,076. Remember, as it appears in our books, a favorable balance appears on the debit side, so it will appear on the debit side in the bank reconciliation. If we are done completing all the transactions, we can total. So we're going to take the debit side. Why the debit side? I know that an outstanding deposit will always appear on the credit side. So this is why I start to total the debit side. The debit side minus everything on the credit side, and the balancing figure is 22,336. This is not part of the question, but I want you to take note of the following. If you see that there are so many outstanding deposits, that is a concern to the business. It can be one of two things. One is rolling off cash, where money is deposited but only much later on. And then secondly, like in this example, where money went missing. So this is a concern. Whenever you see in a test or an exam where there's many outstanding deposits, be aware where you could possibly get a question, what internal control measures can the business put in place to prevent this from happening in the future? And we are going to look at that in our next activity. Looking at our last question, why is it essential to prepare monthly bank reconciliation statement? Give two reasons. One, the books of the business and the bank should agree. This is for internal control purposes. To update our records. To check if there's any errors or omissions and dishonesty can be detected on a monthly basis. This is a common question asked. So make sure that you study this. Why do we need to prepare bank reconciliation statement? Thank you very much. I hope you enjoyed this video on bank reconciliation. As mentioned before, in our next activity, we are going to look at how the CRJ and CPJ can be asked a little bit differently, and also we're going to introduce some internal control questions in the last two activities. I want to leave you with the following quote: forget the mistake, remember the lesson. Have a wonderful day.